Thinking Circles is your fractional marketing department, purpose-built for the recruitment industry with deep sector experience. We consult with recruitment agencies, talent teams, and HR and RecTech companies to deliver strategic marketing leadership with tangible results. Our proven approach enables you to attract top talent, drive client growth, and build standout employer brands. As a flexible extension of your team, we offer the insight and support you need to make smarter marketing decisions without the cost or complexity of hiring in-house.
What great ideas are so close within your grasp? Seeing other points of view, anticipating change, considering multiple possible turnouts, acknowledging uncertainty, searching for compromise. We're going to talk about how to get over those limiters of innovation so that you can extract better thinking from yourself and your team. So let's talk about how to win the future.
In this episode, I'm joined by Thomas Vose, co-founder of HireAra, to unpack what it really takes to build a recruitment tech business from scratch and successfully exit it. We talk candidly about bootstrapping, angel investment, and avoiding the VC trap, and what life actually looks like after being acquired. If you're building, scaling, or thinking about selling your RecTech business, this one is for you. Welcome back, everybody, to the Marketing Rules podcast. It's my pleasure to welcome on board Thomas Vose. Tom is, I'm going to call you Tom because I always know you as Tom. I don't need to be that formal and call you Thomas. I bet it's only your mum that calls you Thomas or something like that anyway, right? You know?
Literally, yeah, something like that.
It's great to have you on board today. We've got a great kind of topic that we're going to go through. But for anyone that doesn't know you or HireAra, Tom, maybe you could just give us a little bit about your background and how you kind of started the business in the first place.
Yeah, so I think luck is probably the overriding word I would use. That myself and a couple of our co-founders were working for a consultancy, and what we would do is we would go into big businesses, typically banks and big PLCs, and just look at their processes and say, hey, I think there's a better way you could do this. Here's some tech, we'll build you something and we'll make you more efficient. We just stumbled across, this was about 4 years ago, this thing called CV formatting as taking up a massive amount of headspace of recruitment sales teams. Me not being from recruitment, I couldn't really get my head around it, but I thought, you know what, there's got to be a better way of doing this, and that was really our beginnings, really, and then kind of took a leap of faith, took a risk, and then here we are a couple of years later, a couple of hundred customers, and we have just been acquired by the Access Group.
Yeah, so we're going to kind of talk a little bit about that. You know, that I think that's really interesting to a lot of our listeners who are in the recruitment tech space. And, you know, the amount I talk to pretty much kind of always kind of go into this with the fact that they want to sell the business in the first place. That's their override, and they're going to build it, then sell it. Was that always on your roadmap, or was it, there's a problem here, let's solve that? Yeah, there's always a chance we might get acquired, but yeah, or was it kind of like we're going to build it because we know that someone at some point probably will buy us?
If I'm being honest, I'm just me as a person. I'm a builder, so I just really enjoy building things. That's mostly a product, or it could be a community, or like a network, or I just really enjoy building things. Maybe started with Lego or whatever as a kid, but I think you kind of get to this point, and I always had this equation where if I wasn't working for myself, I would be working as hard as I am right now, but for someone else. And I just thought, look, I've probably always been quite entrepreneurial, and if you have that kind of build of mindset, I think you're just naturally more suited to being an entrepreneur.
Yeah.
And maybe don't always work super well with a boss, which is definitely a challenge I'm working through at the moment. But I think I honestly never set out saying this is a company that we're going to sell and do whatever. It was just a case of I wanted to build something, and this seemed like the best way I could kind of scratch that itch.
And take us back to the beginnings of HireAra. So how many were you when you first, how many founders in the business? Kind of what did the setup look like? You know, what was it like in those kind of first few months?
So there's actually 4 of us who kind of like spun out, and we were all at the previous parent company. And we, I think all collectively just made a decision that like we were young. I think I was 23, 24 at the time, kind of had nothing to lose really. And there's this equation that I've spoken I've spoken a few founders through it recently, and it's kind of how I look at risk. And I think this really just sums up our attitude and mindset that we went into the business with. That if you look at if you have an opportunity to do something, to start a business, if you look at like what's the worst thing that happens here, and for me it was, I was 23, 24. I maybe had say like 10 grand in savings, some inheritance, like that was everything I had in the world. And the worst thing is, look, if we start this business, I'm not going to take a salary for a few months. I'm probably going to lose that. But the worst thing that happens is, look, I'll just have to go out and get a job. Like, it's not the end of the world. And then if you compare that to the best case, and the best case is, look, got extremely fortunate. We will be acquired in a couple of years, or 5 or so years down the line. And then when you average out the two outcomes, the weighted average is so good that it's such a rational decision for you to actually take this risk and start that business. I think that was very much the attitude that we went into this. Is like, what do we have to lose? We have nothing. Like, we're starting our careers. Worst case is it will just be a massive acceleration of learning. And I think that really kind of sums up, and still is to this day, like, we've just got nothing to lose. So we just kind of, I think, always just flung ourselves into everything kind of head first, because what's the worst that happened?
And in those early days, were you self-funding? Did you have backers? What did that kind of, the financials, as much as you can tell us, kind of look like at that point?
Yeah, so I mean, as I said, the 10K was everything I had in the world, and all of it went into the company. So living in central London, as I did at the time, very expensive. So I moved. I was living in Shoreditch, and I moved to outskirts of Leighton, East London, into a flat where the bed literally folded up into the wall, and to kind of open the desk, you had to fold the bed up, because then the bed was in the way of the desk. And then you were living in. I was living in the same with my partner at the time, in the same room that I was also working in and cooking in, and that was really tough. No way to put it, but I think I went 6 months or so without taking a salary, and that was really tough. But again, I think the advantage that we had, which looking back we were incredibly lucky about, was the fact that we were so early in our careers that you don't have that kind of lifestyle creep. You don't have that. Well, no fixed dependencies, no mortgage, no expectation for how you should be living life. It's a lot easier to make those sacrifices when you have nothing to lose, as I said.
So if you kind of spool forward kind of 6 months into starting the business, you've obviously, things have kind of progressed. You obviously got a product that you're kind of taking to market at that point. And is that when the conversation with backers and investors start, or is it a bit further down the line? When does that all kind of kick in?
Yeah, so I think one thing that was kind of a superpower for us on the journey, what worked really well, is that we kept a lot of our customers very close. And I think we kind of were just really transparent with our customer base. And we kind of turned to them and said, hey, so we've just started this thing, we're taking a risk, we're being entrepreneurial. I think we were really lucky that a lot of people just bought into our mission. And so we kind of turned to our customer base and said, hey, by the way, you're a customer. I hope you like something of what we're doing, or at least you can see the vision of where we're going. Would you kind of like to get involved and go on the journey with us in a kind of deeper route beyond just being a customer? And that became an absolute superpower for us, where we used an SPV, special purpose vehicle, to basically enable us to take on investment from lots of typically smaller ticket angels. It was great to work with you on that same front as well, and it just meant that we had this community of 20 or 30 angels who were all just incredibly helpful. And I think, given the fact that I'm not from the industry, I've never worked in recruitment, it gave me a pool of absolute industry knowledge, specialists that I could tap into for their knowledge. It gave us a massive kind of like reputational boost. I think it really kind of like announced us on the scene that we had backing from such an impressive network of people. And then it just also opened lots of doors in terms of customer referrals, and still to this day, referrals make up, I think, 50% of our new business, and that is kind of still massively from that incredible network of angels that we had in our early days. So it's been, for anyone who can do that, I can really kind of tap up their customers and say, hey, if you like what you're doing, if you like what we're doing, would you like to support us more? that really did work out very, very well for us.
And were there any other kind of considerations around how you might go down it? Did you think about, did you think about going into an incubator where you would then become kind of potentially VC backed at the end of that, or were there other options that you were kind of looking at the time?
Yeah, I think I've flirted with VC over the years. I think there's an element though of you have to be kind of somewhat realistic and have a pretty strong dose of realism when you go down the VC and when you go into the VC world, that what moves the needle for VC is just fundamentally different to what moves the needle for me as a 24-year-old with £0 in the bank. That I think if you go down the VC route, you have to be prepared that you're shooting for the moon, that you've got to deliver VC style returns, and if you don't, they have a lot of control over your business and a lot of take a lot of those decisions away from you, which could stop you doing things which genuinely moves the needle for you and your family. And I think I was maybe pragmatic enough to know that our business is extremely niche, and we were unlikely to deliver VC style returns, but what we were able to do was deliver returns that fundamentally changed my life, my family's life, and all of our team's lives. So I think it was pragmatism, which maybe it was a little bit of naivety, but pragmatism, which kind of made me think that actually we don't really need VC to do this.
Yeah. And was that, again, was that shared across the rest of the founders? Was there any kind of other internal discussions? Again, I'm just aware that a lot of people who are starting their kind of RecTech journey might have a couple of co-founders and things like that. And just wondering what the dynamic again worked between all of you at that point.
Yeah, I think we had maybe a slightly unusual dynamic to have 4 co-founders, but I think it was because I mean, if you look at the makeup of our whole team, that we were all first time doing something. So I'm a first time CEO. Alex is a first time CTO. Tom, Adam, they're all just first times pretty much in their career. That it meant that we always had, I think we had a very shared, similar sense of risk profile and a very clear sense of where we were going. I've been asked this a couple of times, whether we've had any debates or whether there's anything that's kind of like kind of almost split us or kind of like cause conflict. I can honestly say that there hasn't been. I think we all share a similar sense of taking life not too seriously at all times, and there's definitely been stresses, but then actually most of the time you can laugh about it an hour later, or you go for a pint afterwards, and you can just kind of like get it out in a way. But generally I think we've always had a very, very similar perspective on what the business is and the kind of realistic aims of what we could achieve.
Because I guess also with the 4 of you, there's no deciding vote as well, right? That's the kind of what I suppose maybe what you are referring to when it's odd to have just even numbers. Because if you do get kind of stuck, then what the hell happens at that point? And I'm sure you must have had those considerations and those discussions internally as well, right?
Yeah, I think that there were maybe some kind of slight nuances to it as well, though. That the team. So, for example, Tom, who's now like absolutely, I rely on him. I have complete trust and faith in him. He actually started off as my intern back in an old parent company. So I think I've been fortunate enough that I think they're almost as if having like kind of very senior first employees that you can rely on, and that you can rely on them kind of without any fear that the flight risk or any fear that they may not have the company's best intentions at heart. I think that was a real superpower, that we started with coverage of a larger team, which meant that not all of the pressure was on me, that I had people that I could absolutely rely on, just to get things done, and I didn't need to be involved in everything from the start.
And obviously, over this kind of period, the product is kind of it's changing, it's being evolved. What I tend to see with a lot of kind of tech providers is you start solving, you've got an idea to solve this problem, and very quickly, within 6 months to a year, you're starting to solve another problem or other problems and different problems. So you're obviously, how did any of this really kind of, this outside knowledge from recruitment, how did that affect the product itself kind of along this kind of journey as well? And was that being taken into consideration when talking to potential backers, investors, and things like that?
I think I think focus is an absolute superpower, and I think it's so easy to get distracted by the latest shiny use case or to move on to the next thing, and to kind of, I think one of the biggest things that can kill a business is being a jack of all and kind of master of none. So I think that's really been our focus is on, a lot of my focus in a way has been on saying no to different opportunities, and then when we have an opportunity to go in a different direction, to make sure that we back the right horse, and then make sure that we kind of do it well, and don't have lots of different product strands which maybe don't speak to each other or aren't super well integrated. I think we're very much in that position now where we've got our core product, which is mature, it's scaled, we've achieved product market fit, and it's very much now trying to pick a path through, and all the variables which go into that is defensibility, it's market, it's competition, it's looking at what moat do you have, not just from your competitors but from just the generic AI which is improving so much. And I think that focus has been a superpower, and I think that has actually kind of really helped our investor conversations as well over the years, where I could just say with a lot of certainty, this is the thing that we do because we do it extremely well. We do it better than anyone else in the market, and the product, the metrics all kind of stand to that fact, as opposed to just appearing a little bit scattergun, a little bit of a shotgun approach, and maybe not having your clear focus. I think that focus really did help us. We basically did what we said we would do
Yeah.
because of that focus, and I think focus is how we achieved that.
And so prior to the acquisition from the Access Group, how many rounds of funding and kind of investment did you go through?
We'd been through probably about 2 or 3 rounds. They were slightly unusual rounds in that most of the rounds were from kind of SPVs of smaller tickets, kind of piled in together.
Yeah.
And what was amazing about that was it meant that I could have lots of conversations with lots of people over the years, and then we would always have this SPV open on the side. So if I met someone at an event, or who was a customer, or someone was referred to us to say, yeah, actually we're raising because we're always raising. We've got this SPV. If you're interested, you can kind of go away and invest into that. And that happened instantly. And the terms are set. It's not negotiable. It's just you're in or you're out. That's kind of it. And it really allowed us to have an extremely rapid deal making cycle without any real pressure on me, because as soon as we hit the target, if it was 200k, if it was 400k, whatever, for the SPV, I could say, cool, well, we're 80% there. We actually need the cash, so I'm going to close that and pull the cash in. Or saying, actually, we've had a good couple of months, we don't really need the cash, let's keep it open and then close it whenever we hit the full allocation. So that was extremely helpful
Yeah.
for us in how we raised.
It sounds quite a unique kind of process as well, right? Because it's usually quite a traditional seed, Series A, Series B. You know, I mean, hit the targets and then close, and then move on to the wait a year, then move on to the next round, right?
Yeah, I think it just suited me because I was doing a lot of selling at the time, speaking to customers, and it meant that because almost our investor targets of who we were selling to were also customers, it allowed me to kind of like kill 2 birds with 1 stone. That I often see with other founders, that you kind of go through 2 phases. You go into like execution mode, then you go into fundraising mode. It meant that I was always in fundraising mode, but I was never always like only in fundraising mode, if that makes sense. And it just didn't kill my focus on growing the business, as I think it has a habit of. If you're doing kind of like big linear of going to raise 4 million over here, and then I'll go to executing, and then we're going to use the cash and I'm going to go raise 10 million again, it really kind of disrupts your cycle and phases, and I was lucky to never have that.
So let's kind of jump forward a little bit, and then you obviously the acquisition is kind of on your mind, right? I'm sure that Access Group wasn't the only one who were kind of like looking to acquire you. So what did that look like and feel like at that time, when there was obviously a lot of buzz about the business, a lot of buzz about the technology, a lot of buzz about you as the founders as well, everybody interested in that? You've been through these kind of a couple of these fundraising kind of elements. Then you kind of like, there's an acquisition potentially. Then what does that look like?
Hard, to be honest. A lot of decisions to make without a right answer a lot of the time, and a lot of pressure. I think the fact that we had so many investors obviously means that there's a lot of people just kind of asking for updates and asking you for kind of what your thinking is and what the numbers are and all that stuff. And I think the challenge that I had, this is probably when the kind of the team size became the biggest strain for me. That we were, I think, roughly 15 heads at the point of acquisition, and me as the CEO would have been, involved in running every aspect of the business. And then the actual acquisition process and the diligence process was so hard and so time consuming that it basically took my entire focus out of the BAU of running the business, just to focus on getting the deal done. And that's where I was extremely lucky that I had the kind of 3 other co-founders who I could almost hand over the complete running of the business just to focus on getting the deal done. But it was, I think, I was telling someone this the other day that I think the day that the deal completed, I was just so exhausted from the deal process that I didn't really take it in. I didn't really celebrate it, because it was just such a long slog. Obviously, there's amazing results at the end of it, but it was not an easy process to go through. That's for sure.
And with it, obviously you probably can't go into too much detail, but why did you sell to who you sold to? Right.
I think for Access, I think there's a few things that I think Access sometimes doesn't get potentially a great reputation, but I think if you look at what they've achieved, they are a success story, a massive success story of UK tech, that they are now the largest privately owned software business in Europe. They have 100,000 customers. And I think being from the UK, I think there was a geographic element that I probably saw myself to be more culturally aligned with a UK headquartered company than a US one. And I think for Access, they backed and they saw our ambition, and they have backed it with kind of hard cash. So it's not that they view us as being a feature in a broader product and they're looking for synergies and they're looking for wrapping up our support into the broader team to make cost savings. It's actually the opposite, that they saw our vision, they saw the quality of our team, and they said, we want you to do what you're doing but quicker and at bigger scale. And so since acquisition, our team has more or less doubled. We've had massive investment going into the team. We are launching in new territories. Our revenue is growing. We've pretty much doubled our run rate since acquisition. So it's just what I saw Access, the offer from Access, it was the ability to accelerate what we were doing already. And then from a personal perspective, because we're so young and like so early in our journey still, I just wasn't done building, and I wanted, when the offer came around, I wanted a route which would just allow me to keep building but at a bigger scale.
Yeah.
And that was absolutely what the Access offer kind of lets us do.
And you said you didn't kind of celebrate at the end of it because you were kind of so tired. What's it like now that you alluded to the fact that maybe sometimes having a boss maybe isn't naturally your kind of your natural inclination, but you sound still very positive, right? So there must be there's a bit of give and take, and how did you kind of square that circle in your head that I'm going to have to possibly change the way that I work, what I perceive my own business now that I'm part of this larger group?
Yeah, it's hard, right? And to go from being, calling all the shots, making all the own decisions yourself, to all of a sudden, there's other people involved. There's a committee, there's stakeholders. That was definitely an adjustment for me to go through, and it's not easy. Really, it's not that a lot of change happens that you feel that maybe you don't quite agree with, or maybe you can't quite see the reason behind it. But there probably is a bigger picture. But I think for me, the biggest there are two really two frameworks that I look at most things through. One of them is learning, and I think the learning that I'm getting through being here is just insane. Like the scale, the speed of which we're growing, the scale we're now operating at. I would not be going through the learning how to build and how to scale a business as quickly if it wasn't for Access. And I think the second part of that is it's just the scale as well, that we're just building at such a big scale again that I wouldn't be able to operate at if it wasn't for the acquisition. And I think when you can view change through the perspective of actually seeing the bigger picture, I think that helps really make it a lot more manageable. But I'm being diplomatic. There are definitely times I've struggled with, and it has been definitely stressful for sure. I'm not going to beat around the bush.
And because it's an interesting kind of situation, because a lot of people, a lot of businesses and tech businesses, when they looking to be acquired, they're looking to exit, right? They're looking to get out, right? They want to be acquired, they want to do their handover 6 months or something like that, and then bugger off. In your case, there's still a job to do, right?
Yeah, exactly. And it's because I think two things. I think I'm not done building this product, and we have a really clear roadmap of where we want to go next, and that excites me. And I'm more excited about where we're going and where we'll get to than I've ever been before. So I think I've just always had the sense that I'm not done building yet. And the acquisition came around a lot earlier than we thought it would, but you kind of like respond to what you're given. Obviously, that was incredible for all of us. But it's just that sense that we're not done building yet. And I think the other thing is AI is moving so quickly that I just want to be involved in building these insane solutions that are enabled by AI. And I think some of the broader AI strategy stuff that Access is working on is just phenomenal and incredibly exciting. And I wanted to be in a place, building AI at the highest scale. And I think that this is clearly a very good home for that at the moment.
Before I let you go, all right. We've talked a lot about this kind of like the journey you on. We haven't really talked a lot about the product, right? So for anyone listening, give us kind of an update of what HireAra looks like today, and maybe even potentially what's coming in the future.
Yeah, so we are a candidate presentation platform for recruiters. So I think we were pretty much just the first mover on generative AI in the space. That we've had an OpenAI integration for coming up to 3 years now. So pretty much any way that you can think of presenting your candidate, you can do it on HireAra. If it's formatted CV, if it's a deck, if it's a website, it's all stuff that can be done on HireAra. And our goal is to basically give you the tools to make your candidate stand out. And like ultimately, for a recruiter, that candidate, the way you submit that candidate, it's your packaging of your brand, it's your brand, it's your IP. Ultimately, that candidate becomes your product that people pay a lot of money for. So it's just making sure the packaging and your brand and your IP is just wrapped up in a way which justifies the value you've added. So that's kind of what we do. And in terms of where we're going, I said I love focus, and we're going deeper into that niche, and we are working on some insane stuff all around candidate presentation and like new mediums to present a candidate which have not been possible before. And I can't say too much because there's some big updates to come, but I'm just so phenomenally excited about kind of the state of AI and what AI is enabling us to do. And there's some really cool stuff to come from us over the coming months.
Oh, well, Tom, I'm sure we'll have you on in the future to discuss AI. Although I am quite glad that we got through most of this podcast without mentioning AI, because I can't turn without kind of like bumping into something.
Yeah.
But we'll have you on and again in the future, and we can discuss all that kind of stuff. Tom, as always, we're going to include all of your details in the show notes. If anybody wants to know more about you, about the product, about your services, then they can kind of contact you through there. But Tom, thank you very much.
Perfect. Well, thanks for having me.
Thanks for listening. And don't forget, you can subscribe to the Marketing Rules podcast on Apple, Spotify, and all other major podcasting platforms. I've been your host, James Whitelock, and I hope you can join me and more amazing guests next time. The Marketing Rules podcast is a Think in Circles production.